Did you know just because you may have great credit, it doesn't automatically mean you're going to get approved for some type of funding? Someone who, let's say you have a 750 credit score, that doesn't automatically mean you can get approved. Someone versus someone who, let's say, have a 680 credit score. They may have a 680 credit score and get approved for funding, but you here have a 750 credit score and get denied. The reason why is because one of the reasons is, what if you have a very thin file, a credit file? Think of your credit report as your financial resume, and that financial resume needs to be built up. Now, that's why I tell clients, just because you have a good credit score, that may get you through the front door, but it doesn't mean that you're automatically going to get approved for some type of funding. Now, if you have a very thin file, I teach my clients how to build up their data points to thicken that credit file so that it can increase your chances of getting approved. Let's use an example. Let's say you do have a 750 credit score, but you only have one credit card reporting. You don't have any installment loans, meaning that's something you pay a fixed rate on, like a mortgage loan or an auto loan or a personal loan or something like that. That's not reporting. You just have maybe one or two credit cards. You won't get as many data points as someone with, let's say, a 680 credit score, but on their credit report, they have a mortgage loan, they have an auto loan, they have a personal loan, and they have about 2 to 3 credit cards that are in good standing. Their chances of getting approved for funding is a lot higher than yours, even though you may have the better score. The reason why, you have to think of it in mind of a lender. Because when a lender is looking at your credit report, remember, it's like your financial resume. And they see that the person with the 680 credit score has all of these things reporting in good standing. They're saying, oh, this person has a mortgage loan. Oh, I see they can handle a large sum of debt and pay it off or pay it down on time. Oh, I see this person has an auto loan. They've had an auto loan in the past, or they have an auto loan now, and they've been making their payments on time. Oh, I see that they're staying under, their balances are under 30% of whatever their credit limits are on their credit cards. I'm going to give them the funding that they're asking for because I see that they're showing that they can be trusted to handle a large sum of debt and pay it off or pay it down. Versus someone who has a 750 credit score that only has maybe 2 credit cards on their credit report and that's it. How do they know that if I give you a mortgage loan, are you going to pay it back? Or an auto loan, are you going to pay it back? When they just see a couple of credit cards with probably very small credit limits. They may only have a $1,000 credit limit or a $500 credit limit on the 2 cards that they have reporting, versus the person with the 680, they may have a credit card, a couple of credit cards. One has a $5,000 credit limit, the other one has a $10,000 credit limit. So you want to be mindful, just because you may have a great credit score, you can still get denied funding, or you may not get the maximum amount of the funding that you're asking for. So for more tips and tricks on how to improve your credit, to improve those data points and increase your chances of getting a higher credit limit or to get higher limit amounts in funding, just feel free to reach out to me. Click on the link below and schedule an appointment. I love to talk and share some strategies of what I've learned how to build up your data points. Thanks.